The Delhi government has become the first in the country to mandate e-commerce companies, aggregators, delivery companies to have mandatorily EVs in their new fleet. So in 3 months from now, that's by the end of March, they're saying as if you're procuring new vehicles for the fleet, you have to have 10% electric when it comes to two-wheelers and 5% electric four-wheelers. By March of 2023, the two-wheeler portion should become 50% and four-wheeler 25%. What is this going to mean for the industry at large? I'm being joined by Vivek, the co-founder and CEO of Bounce. And from an investor perspective, I'm being joined by Kunal Khattar of Advantage. Vivek, I'll come to you first. You recently recovered from COVID. Hope you're feeling well. And is this just the kind of news to make an EV maker like yours do balle balle? Yes, that's what we say in North India, right? But how realistic is this new policy by the Delhi government?
Right. Thanks, Nayantara. I'm doing good. I'm doing good and recovered from COVID. Thanks for asking. I think it's a very interesting move from a government, right? I think it's very important because I think unless the government mandates, we will be on status quo for a long time, right? As in, there is no incentives for companies to actually start thinking about EV. I think so. It's a good move, but practically there are a bunch of challenges. The biggest challenge for delivery companies is about the range. A typical food delivery partner does about 100 to 120 kilometers a day. And with electric, what will be the downtime? And also we have to understand that Swiggy, Zomatos of the world, they don't invest on the scooters. It's the delivery partner's headache. So it's a move now which puts the onus on the food delivery and logistic companies to think on how will they make EV happen. We have interacted with most of these companies in the past. The biggest challenge is who is going to fund these scooters? Where is the capital going to come for this? None of the logistic delivery companies wants to own assets on the balance sheet. So it becomes a very tricky thing, but also gives opportunity for new models to evolve. And I think this is in a way good way for all of us to think on how will the EV transition actually happen. But if you take from a delivery person's point of view, for him from switching from petrol to EV saves a lot of money. In most of the states in India, a delivery partner would end up saving close to about 4,000 to 5,000 bucks if he switches to EV, just from the fuel and repairs and maintenance savings. So this would definitely mean more money in delivery person's pocket, but we have to see how will the actual transition happen. Would be happy to share more thoughts on this. We have a couple of options that we think is realistic, and we are talking to these logistic companies. I'll come back to that later.
Thank you for raising all of those pertinent points. And let me go across to Kunal for that. Some very interesting questions being raised by Vivek. Now, these aggregators, delivery companies, they all are following an asset-light model, right? Now, the minute you tell them to purchase a more expensive electric vehicle, Kunal, how is this going to work out? And the second question, where are they going to get all these EVs from?
No, great question. I think given that these aggregators are dependent on existing supply, so this is that transitional change where today maybe 100% of supply is petrol or ICE engines, and now government is mandating a percentage of vehicles on your platforms are going to be EVs. So it will definitely spur demand. And the good thing about it is that if it's a demand-led growth, which it is, there is going to be investments across the entire value chain, right from the batteries to the charging infrastructure, not just to the OEMs, and to creative financing models. India is a country where even though we have over 200 million two-wheelers on the road, almost 25 to 30% of people who are applying to come on board these platforms don't own the vehicles themselves. I think what will happen now is a majority of people who are looking for these part-time or full-time jobs and are not existing owners, mandates like this and creative and attractive finance solutions will make it more and more affordable. EVs will make it more affordable, and therefore adoption of EVs for B2B use case where the payback and ROI is much faster will accelerate overall ownership of EVs across both use cases, whether it's commercial or personal mobility.
Okay, so some answers over there. And Vivek, coming to you, you said you have certain options that you've been talking to, whether it's a Zomato or a Swiggy or a Flipkart or an Amazon or whoever it is.
Yeah. So, Nayantara, I think, like Kunal mentioned, there'll be very innovative financing schemes which will open up, which is great. Fortunately, two-wheelers is an asset class which can be financed. But now it's all about how do you finance someone who doesn't have a credit rating, etc., all of that. So there will be interesting financing options which will come out. At the same time, I think financing in another fashion, like leasing scooters to these delivery partners would open up big time. One of the options that we think is the most practical, keeping supply chain in mind, and because the timelines are for next year, right? As in 50% of the fleet has to be EV in the coming year. We think retrofitting these petrol scooters into electric scooters, while it might not sound fancy, is the most practical and most viable solution for delivery partners, because they all have two-wheelers, which they already own in some fashion. Transitioning that to EV through a retrofit kit is very practical. We have done it at Bounce, and we have been working with delivery partners for them to try this out, etc. The beauty of this retrofit model is that there is no upfront cost for these delivery partners. They pay a small EMI on a monthly basis. To just put some math on this perspective, a delivery partner will save close to about $4,000 to $5,000 a month by transitioning to EV with the same vehicle with no upfront cost. Out of this, about 1,000 rupees can go on the retrofit kit. And for battery and for energy, he could use the battery swapping infra. We have already seen e-rickshaws using battery swapping already. So we think the same thing will also happen with two-wheelers. So I think this is one of the most practical and viable solution for delivery partners and also transitioning to EV. Apart from this, we think there will be quite a bit of avenues for companies to own up scooters, like rental companies like us, which can own the scooters on the balance sheet and spread it out by renting it to people, as in renting it to delivery partners as such. So we think these are two viable solutions, but in the long term, what we have to keep in mind is the total cost of ownership plays a very important role. So we have to really think and build electric scooters for delivery partners who spread the asset out very quickly, so that the replacement cost, the actual variable cost for the delivery partners are low, and it's just not the initial fuel savings that they make and end up spending a lot of money on battery replacement or something of that sort. So it's very important for companies to think about building a B2B specific scooters, which are very different from B2C scooters.
So it has to be affordable, right, Kunal? Because the next question will be, and I'm asking this as an investor as well, and somebody who's taken so seriously in the ecosystem, the startup ecosystem, if you're going to suddenly have to make these large investments, and I'm talking about the aggregators, delivery companies, new startups, all of that, to just have these vehicles in your fleet, how is it going to be passed on at the end of the day to the consumer, especially for a delivery company? Like, for example, I can't imagine a Zomato or Swiggy is going to tell a restaurant, you up your prices, or does it take a delivery charge from a consumer? Should a consumer pay more if an electric vehicle is coming or an ICE vehicle is coming? How's it going to pan out?
So actually, operating cost of EVs are significantly lower than petrol vehicles. So I don't think there is the question of passing on incremental cost to customers is going to come up at all. It's more a question of getting the EVs in the hands of these delivery partners who are already there. And I think the two things that are going to be drive this, the two things that are going to really create a faster adoption is, number one is the separation of ownership of the battery and the scooter or the vehicle. The minute you remove the cost of the battery from the vehicle, actually EVs become cheaper. In fact, Vivek himself has mentioned that without the cost of the battery, a two-wheeler today is the same cost of what a two-wheeler was 10 years ago. So that itself makes the entire ownership possible. The second thing we're going to see is rapid adoption of leasing models, where there are companies who are looking for certain rental yields or yields that will be more than happy to make the initial capital investment and lease or rent these vehicles out to the end users. We have companies in our portfolio like Grip Invest today that has over 170 crores of assets which are being leased out. Majority of them are electric vehicles. So separation of batteries from the EVs and leasing solutions, both of them are going to go a long way in helping in faster adoption of EVs for delivery vehicles or delivery use cases like Zomato, Swiggy, etc. Both of which will not need customers to pay a premium for this.
Okay. Now, as we start winding down the conversation, Vivek, you've given one option, which is retrofit, which, you have also admitted is an expensive proposition. So as an EV maker, what is the way out? Will companies like yours, for example, offer a cheaper price when it comes to B2B?
Yeah. So, Nayantara, I think companies have to build a B2B specific scooter, which means while building a scooter itself, you plan for ruggedness, you plan for variable cost below, lesser plastic parts, more metal, etc. All of that. So we actually have been working on a B2B scooter, which keeps all of these things in mind, because we are a mobility company, and the scooter that we use for mobility, as in when I say mobility, for shared scooter basis or delivery, has to be very different. So we have a different form factor that we are building, keeping total cost of ownership in mind. So I don't think we can offer a consumer the B2C scooter that we have in mind for B2B use case, which can be a stopgap solution, but it's not the right thing to do from a company point of view, not from the delivery personal point of view. So we have a separate scooter coming in. We believe in a multi-product form factor. So in terms of products, you should have all the way from your TVS XL equivalents in electric scooter to all the way to scooters which can actually go on speed like 60 to 70 kilometers and have a good range, or battery swapping as a solution. So we are coming up with multiple products to solve for each of these use cases. For instance, if we are talking about NCR region, you will need a scooter which is more powerful, so it can run on these highways, etc. But if you're talking about a tier 2 or a tier 3 town, which are probably 3 to 4 square kilometers, but still deliveries happen, probably a TVS XL equivalent of electric scooter is what is required. So we're coming up with multiple form factors which should help these delivery use cases. And we also are coming up with very unique options to own, like rent to own, lease to own kind of models. So this will enable delivery partners to just start getting the scooter without having to worry about down payment or access to credit, etc. All of that.
Kunal, I'm going to give you the final comment. Now, the EVs turn out to be the buzzword. We've seen what has happened in the ecosystem recently, whether it is Ola, which came out with this bike, didn't go as per plan, whether it was delivery or the features, now upgrading them to the Pro. You have a company like Bounce, which is coming out with its bike in the month of March. You have Ether, where you have Hero MotoCorp, which is going to be investing another 420 crore rupees. You have a startup like Rapido, in which you've invested, which is likely to be snapped up by Swiggy. So there is money that is coming in as far as EVs go. There are strategic investors that are coming in as far as EVs go. But with what the Delhi government has announced, and it could be precursor for other states, we'll need a lot more capital, faster rollouts, faster manufacturing too.
Yeah, so I mean, as a fund, we've been very bullish about EVs. In fact, our entire second fund focus area has been EVs, and we've been investing in this area for almost 3 years. I'm glad to see that the markets and regulation is now catching up and making EVs mainstream. There is going to be need for huge amounts of investment in creating the necessary infrastructure, not just on the manufacturing or the OEM side, but as well as on the aftermarket charging, etc. But that's the beauty of capitalism, right? Every opportunity like this creates so many different business models where investors like us can go forth and deploy capital. I think the good thing is that India was already the world's largest two-wheeler manufacturer, albeit these were ICE vehicles. I think given that there is already a very strong supply chain that's available for new age OEMs who are coming on board to manufacture EVs, to leverage that ecosystem, to be able to build better products, to be able to build very use case specific products, to Vivek's point that we're going to now see very specific models just for food delivery and separate models for grocery deliveries, etc. The good thing is EVs is a far simpler technology to execute on. Therefore, the capital requirement in EVs is actually significantly less than traditional engineering that was needed for creating ICE engines, which means customers will get better choice, customers will get better finance options, and adoption of EVs will be very fast. This is what I referred to as that we are today in the same spot where smartphones were 10 years ago and mobile telephony was 20 years ago. So the EV revolution has just begun.
The EV revolution has just begun. Exciting times ahead for all of us. Let's see how it pans out. It's still early days, and most experts have also been saying that India perhaps is going to lead the world when it comes to two-wheelers. For four-wheelers, let's see if we can do that, or if you're going to be a follower. With that, I'd like to thank both Vivek and Kunal for taking the time out for joining us live right here this Monday on ET Now.
Thank you, Nayantara.
Thank you.